With the Q1 FY19 results out of the way, analysts have already started tempering down their FY19 earnings expectations for the full year itself. So what we did is look at companies and how analysts have in fact revised upwards or downwards their expectations for the FY19. But important to note first is the methodology that we have used. So the company has to be tracked by at least 10 analysts, and there has to be FY19 EPS estimates that are provided by the analysts. Keeping that in mind, let's have a look at the overview of how the entire or the broader view picture looks like. So there are 251 such companies where the expectation is available for the FY19 EPS, out of which 57% have seen a downgrade, while 39% have seen EPS upgrades and 4% have seen no change to their expected EPS. But there's a lot of trend when it comes to the sector analysis. So if we have a look at the upgrades in terms of the sectors first, not much over here in terms of the upgrades. Technology, energy and FMCG have seen minor upgrades. But among the technology stocks, interesting trend stood out is that Redington and TCS, these are the only two stocks that have seen a downgrade in their EPS, while all of the other stocks, which is the balance 11 stocks, that has actually seen an upgrade in their EPS. And we start with the downgrades with the industrial space that has seen analysts cut their EPS expectation by about 0.7%, followed by utilities, financials and materials with a cut of about 1.14% to about 2.7%. If you look at the other sectors, the remaining balanced ones, consumer discretionary, healthcare has been cut by about 3.5% to 5%. But have a look at the communication space, which has 12 stocks and has seen a cut of more than 11.18%. In fact, all of the 12 stocks, barring Sun TV and Just Dial, seeing a downgrade in their EPS. But there's been a lot of stock-specific upgrade and downgrade as well. Let's look at the upgrades first. Some interesting names over here. DLF, analysts have revised their FY19 EPS by upwards by about 50-odd%. Now this is on the back of the management sounding confident of achieving more than 2,000 crores worth of sales, and also that the analysts are expecting an improvement in their cash flow. Nalco, of course, on the back of higher LME prices, and Ashoka Buildcon on a robust execution pipeline as well, has seen an upgrade of about 37 to 39%. Mahindra & Mahindra, the only auto stock to post strong financials for the recent quarter, that has been upgraded by about nearly 13%, followed by L&T Finance by about 11.5%. But as far as the downgrades are concerned, let's have a look at that list as well. Bharti Airtel at the top of the list, analysts have revised their expectation downward by about 62% on the back of weak earnings, followed by Tata Communications, Narayana Hrudayalaya and Healthcare Global. Both of these healthcare stocks have in fact shown some bit of margin pressure, and hence the downward revision as well. Lastly, we have Interglobe Aviation. Once again, on the back of weak results, analysts have revised their FY19 expectation by about nearly 31%.